Hello, and welcome to this week's Tackling Your Taxes episode, Claiming a Gambling Loss on Your Tax Return. My name is Aisha Servati, and I'm the director of the Low Income Taxpayer Clinic at Mid-Minnesota Legal Aid, where we educate and assist taxpayers with IRS dispute issues. So, an overview of this week's episode, we're going to be talking about what are gambling winnings, what qualifies as a gambling loss, how to claim a gambling loss in your tax return, and some helpful resources. So, what are gambling winnings? So, gambling income is the amount of money you win from gambling activities. And there are a variety of sources of winnings and losses, as I list some of here, including lotteries, raffles, racing, casino games, poker games, sports betting. It does not have to be at a formalized gambling institution or facility as well. It includes those lottery winnings that might be like scratch off tickets or raffle tickets or different things like that. And it both includes cash and non cash winnings, both of which are taxable income. And so the baseline is that gambling income is taxable income, and you are to report the full amount of your gambling winnings. So you may receive an IRS form W-2G depending on the type of gambling and the amount won. And this is what a W-2G looks like. It provides the information of the payer and then the winner's information, the amount of reportable winnings, and then if there were any taxes withheld from those winnings. So you can expect to receive a Form W-2G if you win more than $1,200 on slots or bingo, $1,500 or more on Keno, $5,000 or more in poker tournaments, and $600 or more on other games. And with the $600 or more, that can be dependent on the type of activity, as well as whether or not it was 300% or more won based on the bet amount. And so federal taxes are withheld on a flat rate of 24% if your winnings are reported on a Form W-2G. And you are required to report all winnings even if you do not receive a W-2G. So even if your winnings are less than, let's say you play on a slot machine and your winnings were $800, that is $800 of reportable taxable income, regardless of you not receiving a W-2G. So what you do is you can claim gambling winnings as other income on your Form 1040 tax return, so on a Schedule 1. And then you must report the full amount of your winnings as income and then claim your losses separately. So what you're not doing is you're not reducing your gambling winnings by your gambling losses and reporting the difference. You're actually reporting them, the two of them separately, and you're making sure that any records that you have are separate as well. So now I'm going to be turning my attention from gambling winnings to gambling losses. The two are related together, and you'll see the emphasis on gambling losses in relation to gambling winnings. And so gambling losses are the amount of money you lose engaging in gambling activities. So the amount of gambling losses you can deduct can never exceed the winnings you report as income. So for example, if you have $5,000 in winnings, but $8,000 in losses, your deduction is limited to that $5,000 and you cannot write off the remaining $3,000 or carry it forward to future tax years. And then something to note that qualifies not only as the gambling, so you have your gambling loss, which is the amount that you lose in gambling activities. And then you can also include in your gambling losses the actual cost of wagers plus other expenses connected to your gambling activity, including travel to and from a casino. So for example, if you are going to a place like Las Vegas and engaging in gambling activities, then you want to make sure that you keep your airfare receipts, for example, because you might be able to include that in your gambling losses as well. So how do you claim a gambling loss? which is really important to note. So you're reporting your winnings as income, regardless of whether or not you're claiming a loss. And then to report your loss, you must itemize your income tax deductions on Schedule A. So the only way to take a gambling loss, again, up to the amount of your gambling winnings, is through itemizing your deductions. So if you typically itemize your gambling losses plus your other itemized expenses. So you'll normally do that if it's more than the standard deduction for your filing status. So you want to look and see what the standard deduction is and make sure that itemizing is more than the standard deduction. If you do claim the standard deduction rather than itemize, then you are still obligated to report and pay all tax on your winnings you earned during the year, and then you're not going to be able to deduct your losses. So a thing to keep in mind with gambling losses is you must keep accurate records of all gambling winnings and losses. And so there is this requirement by the IRS that is placed on you, the taxpayer yourself, in order to claim a gambling loss. Your records need to include the date and type of gambling you engage in, the name and address of the places where you gamble, the people you're gambling with, who might be witnesses to your gambling activity, and the amount that you win and lose for that day. Other documentation to include to prove your losses are wagering tickets, canceled checks or credit records, receipts from the gambling facility, bank withdrawal records, and statements from the gambling facility. For example, if you do something like slot machines, then you might end up getting a win-loss statement at the end of the year if you use your player's card to keep track of your wins and losses for the year. You can find out more information in IRS Publication 529, which talks about miscellaneous deduction. It goes details the different type of gambling activities and what some of that additional documentation looks like based on the type of activity. Just one thing to make sure is you do keep that concurrent record of the date and type of activity that you're engaging in and the amount that you're winning and losing. You want to make sure that you have all of your records together for the tax year and that you're keeping your records for at least 3 years, because the IRS does have 3 years to audit you. And so it's recommended that you keep them longer, but at least for 3 years. So that's the information I have on gambling winnings and losses and claiming on your tax return. Again, just as a reminder that all gambling winnings are taxable income and that you can take the amount of loss up to the amount of winnings, but not anymore. And that if you are taking a loss, you need to itemize your deductions on your tax return. If you have any tax issues or questions, you can call us at the Low Income Taxpayer Clinic at Mid-Minnesota Legal Aid at 612-334-5970. Just as a reminder that the LITC does not prepare tax returns. And you can find out more information on irs.gov/VITA for volunteer income tax assistance sites, which are still open across the state before tax filing season ends. And then for more legal resources on both taxes and other legal issues, you can go to lawhelpmn.org. So that's this week's episode of Tackling Your Taxes. And I'll see you in 2 weeks for our next episode. Thank you.